Okay, welcome back. We're continuing with part 2. We're looking at trading on August 18th, 2015, and we're gonna continue with a part 2 of what we were talking about in the first video: market structure profile strategies. And we were looking at part 1, and we're going to try to go a little bit deeper here on part 2, where we're using the ordinary candles with the kind of thinking that we develop with market profile understanding of the auction process. And we're going to find there's ways to get trades. Once we identify support and resistance, we first of all understand support resistance that's there day in and day out with standard measures of identifying where is everybody on that given day. Are they bullish, way above the prior day high, or are they under the prior day's high and not yet under the daily pivot? Are they trading above the night session open or below it? And how are they doing in the terms of the micro trend? Are they above the last pivot back before the lowest low, or are they below the last pivot back after the new low is reached? And then if you make a new low, where's the new last pivot back? Same thing coming off of highs. Same thing coming off of lows. Here's the last pivot back right after that open, the 8:30 1-minute opening range. And they never really got a handle on being above that. So it held basically the whole day, but they had 3 pretty healthy probes. In this one, they were above for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minutes. They were able to keep poking above. But they ultimately failed after a short-term triple top, which followed another double top, which followed a retest failure here. So we were just identifying that after this retest failure, the logical expectation is the market will get a little bit of energy up to see if they can now finally get through that low that held earlier. Because remember, the whole day trading so far, and this is at 10:30 Central Time, 2.5 hours after the 8:30 open, they have never been able to really confirm any upward motion after any probe of the last pivot back here. So it's a real sloppy downtrend, that's for sure. But by my simple ways of identifying things, it's still a downtrend. They're not holding above the last pivot back. So when they get below it, you want to sell rallies. If they get above it like this, it's not convincing me because they can't get above this pivot from some high that took place in the early morning night session, and they can't get above the opening session for the whole starting from the day before, and they never even got close to the prior day high. So I'm thinking they're not very bullish, and maybe they're going to finally test down here. Now the question is, when do I get a really good trade? If I'm looking at all the evidence an hour and a half into trading, and that's what this market structure allows us to do, then when do you finally want to get on it? Do you want to wait till it's way down here? Well, you can do that, and some people do it. Or do you just want to look for a good setup to go short? We can just put stops in up here above the night session open. So selling up here is a very positive strategy. It's a high expectation. It's very well substantiated. It's very low risk. You could risk maybe 6, 7 ticks. It'd be a great buffer by the time you're getting over here. The point is, once you see these highs, 2 of them, 4 minutes apart, stopping right here where they stopped 4 minutes apart, 3 or 4 minutes. Put an order in. This is you're risking a few ticks. And what's the possible reward? I think down here Where would I be looking to take profits? I'd be thinking maybe around the moving average. I might want to get out here. I'd be thinking maybe if it gets long bars like this, then I want to hold until I see it hit something. And here's a support, obvious support point. All day long it held here, it was a little above here throughout the day. And where was that, by the way? That was coming off lows way back over here at just about 3 in the morning, Central Time. And they've just poked through a little bit here. They gave it their best shot right off the open, stopped one tick below it here, very, very shallow probe. And they finally, after this selling on the first rally off of that little probe, they pushed it through it, but they stopped at the pivot with basically a triple bottom following the probe. So this looks pretty solid until way over here. It looks pretty solid, but remember, it's still just a bear market rally because they're underneath the last pivot back. So they haven't changed market structure to be in an uptrend. So it's a suspect upward bias. Maybe you look at this, well, it's above the last pivot back, so they're going to eventually hold. They're going to eventually go higher. That's what all these people thought who were still buying. They gave it plenty of chances, that's for sure. They were willing to put their money on and hold for the first rally up. They sold off pretty strong. I mean, you know, in the context of short-term 1-minute chart, 45.61, and they went down here to 45.52. So 9-point sell-off in the Nasdaq. That's a healthy range. You'll see lots of swings. 9 points, 7 points on a smaller day, 9 points, 12, 13 points on the more bullish swings, or even up to 14, 15. But at any rate, let's see this one, this rally. You rallied from 47 up to 61. So there's a 14-point swing. So that's what you're looking at as stopping the market every time, even though they were able to keep it going for you know, a decent amount of range. But over here, this is a golden, and not just a single golden, but second chance golden opportunity at the very high tick to get in somewhere like right on this resistance of a prior high or low. So that's when you see me draw these in, I'm drawing it in at what I think are significant pivot highs or lows. So 4 in the morning held pretty strong all the way into the day session here, all the way up to 10:24, and finally rejected it. It held it basically. These were probes, and the participants were really willing to give it a good shot, but it failed. So this is a really good bona fide strategy. These selling strategies here, when you break through some support and you hold at some support further penetration, you can sell rallies off of it, but don't go to the well too many times. That's a simple way of understanding. So you can sell up inside this opening range resistance, but I would either want to do it here or here or here. I'm not necessarily thinking that I'm selling this all the way up. It's just that once it goes up here, selling underneath the last pivot back, at least on the first try, is a good trade. So the other thing to give you an idea about strategies is these moving averages are very, very valuable. All I do is use a 50 and a 200. So what are we looking for? We're looking for either a really obvious trend where the bars get way far away from that 200 moving average, and they get in what I call a pocket between the 50 and the 200. Then, the first time into that pocket, this is a good sell for a good little scalp. You get 54.75 down to 49. So if you get 5.5, 6 points potential, that's decent money. Now, obviously, selling at the 200 might be good the first time, but it might not be a good trade the second time. So that's how we can use moving averages. When they get like this and they're crossing, this is choppy, I want to be fading extremes. So I would be selling these highs based on my analysis of the moving average. It's chopping, it's going above and below, it's flat, it's going sideways, however you want to look at it. Buying support down here, selling resistance up here, and still a good buy here. You got this long stem bar here, you got a hammer here, another long stem, that is. Here's your third box. It's a good buy, simply because it hasn't really established a strong downtrend yet. It's still a choppy sideways, but we're finding an extreme, and I like to get in at extremes. So then there are places easy to scalp. There are places where the probability is much better. The risk-reward ratio is so much better. So once again, they're coming off of this the pivot again, but when they're rallying up here, this is, in my way of reading the market, and again, it's going back to market profile, volume, behaviors. This is not any strong bounce. This is just what you call a grinder. Lots and lots of bars in short range. On the downside, they were quite enthusiastic here with very wide range bars. Went down very quickly and strongly until they had a reason not to hang on anymore. But what this is giving me is an opportunity. It's like the battering ram, and here the battering ram was buffeted fairly easily. But now the next time they go down, I'm thinking they might be stronger. So selling here at, again, they're back under that last pivot back. It's actually held, like I said, you could look at it as being a downtrend all day long, even though it's just a choppy, some people would just call this noise. But I think it's very significant they couldn't get above that pivot there, which is the lowest pivot before this low. So this is a great selling opportunity once again. And again, you've got a possibility of even 3 or 4 tick risk, reasonable to expect. So if you put like your stop up here, risk 8 ticks or something, it's a really good risk-reward trade. Now, this is a trade of its own, so I'll just tell you about it. Go study 1,000 charts and you'll see it comes up a lot. It's what I call 3 weaker highs. So you have your high, they retest it and they fail. The next time they try to get up there, they retest it at a lower price and fail. That means sellers are stronger, more convinced. A little bit lower, they sell it again. Now this time they broke hard, and that's what will happen when you see three weaker highs like that. Or that's going to oftentimes precipitate a more one-sided move, big long bars comparatively in this noisy day. So now we finally got a lower low here, lower than that one that was the low for the whole day that gave me that last pivot back. So now we draw in our last pivot back above that low. So now I'm looking to sell rallies again, and now I'm getting a wider range, stronger sloping moving average. So when I get into that pocket between the 50 and the 200, it's a good selling opportunity. And there you go. Now, this new lower high here, because they made a lower low here, you're selling here. And what do we got? Another triple top. Number 1, number 2, and then they just poke through by 1 tick what I call my stop run hook, SRHK. It's a probe at a very clear, obvious resistance, and if they only go through by a tick, that's a great trade. So again, you're risking just 3-4 ticks, logical risk. Say maybe you want to risk 7 or 8 or whatever, and it actually went down, but stopped short. So now you're thinking maybe all bets are off for the end of the day, or are they just going to rally up here and give me another selling opportunity? Sort of a little bit of both, but nothing other than another very clear sign that the sellers are running out of gas for the day. They didn't want to push it down into the close. They wanted to waffle on their commitment, whether the next day might go up or down. And that brings me to the final thing you always want to do, and that is you always want to look at the daily chart. So this is another chart that I have on my third screen over there to the left. It's simply the daily candles, and we're looking at the price action, long stem, Thursday's trading, Friday's trading. Now today's isn't up there, but we can look at that live. Here we see today's chart, and all of that stuff that we were looking at, it all fits into this one bar. Remember, they were below all day long during the day session after 8:30. They were underneath the previous day's high. They failed up there real early in the night session. They never got back up there. So actually looking at the daily chart gives a tremendous amount of information. They had long stems for many bars building into the day, and there was some consideration. Maybe they wanted to try to break out above Monday's trading. Yesterday was Monday. And maybe they could run it up. Maybe they could try to take out this high, or maybe even this high. But the buyers never were willing to put their money on the line. And so then it was a question of how low are they going to try to push this market. And that's what we're seeing going into the close is they're going to sit right on the fence, and that's what the pivot is, the fence. So I hope that helps, and we'll look at more strategies going forward using this simple candle analysis of the principles that we're basing our market structure on. Hope that helps. Thank you.